You're entering the future-ready CNBC TV 18 EBIX Cash Studio.
Hello and welcome to Big Deal. Now, this year is dedicated to the unicorn listings in India, clearly. But then the question arises again, do we still need the option of foreign direct listing for the Indian tech startups for raising their much-needed funds? Now, jog your memory. Cabinet had given its nod for foreign direct listings, but the final rules never got announced, and then the tax considerations may have stalled this process. Where do we stand now? And is the government going to make any announcements in the upcoming budget? Let's find out from our panel of experts joining us on CNBC TV 18. Vivek Gupta of KPMG, Piyush Gupta of Sequoia India, and Shubhrajit Roy of Bank of America. Gentlemen, so good to have you on CNBC TV 18. Piyush, first question to you, because you will be the beneficiary of all the upcoming IPOs as well. You have portfolio companies ripe at that stage. What do you think, given the kind of experience that we have already seen in the Indian market and some successes from the unicorn world already, do you think that a flexibility or the choice of foreign direct listing is still required?
Hi, Nisha. Thank you for having us. The answer is absolutely yes. It's been a great start for startups. I think just from our portfolio, we've had 8 companies go public this year. So it's a very good start. And I think the transition from private markets to public markets is a very important one. And so far, it's been a very encouraging start. That said, I think startups come in very different sectors, stages, and therefore the choice of international listings where it makes sense, and it will make sense for a small percentage of companies that are in the startup space, is an important one. We can go deeper into why we think that's important, but the short answer is yes.
Right. So rooting for that, Piyush Gupta, from on behalf of the startup world, I know many of the founders have again written to the government asking for this particular opportunity. Now, Shubhrajit, you have skin in the game as well. You have been in the midst of many of these IPOs coming up and many in the pipeline as well. What do you have to say? Because we did have foreign investors' interest also giving their stamp of approval for the kind of valuations that we have seen in the recent IPOs and the unicorns.
Hi, Nisha. So absolutely, this year has been a record IPO year by any standards. $16 billion and counting. At BofA, we led about $4.5 billion of IPOs, including the likes of Zomato and Nykaa. Clear takeaway is that Indian markets have matured to rightly value Indian tech unicorns, and you have seen the interest very broad-based across domestic as well as international investors, both institutional and retail. And clearly, post these IPOs and the few that are lined up, India has become a very credible listed alternative for US for any tech unicorn to evaluate. Having said that, US also had a record-breaking IPO year. They raised $300 billion of funds through IPOs. Large part of them were tech. In fact, as BofA, we led the $1 billion Freshworks IPO, which we believe is the first of many India SaaS IPOs to kind of go and list in US. And clearly, the market is very open for new ideas from India and other emerging markets. So we believe India and US, both capital markets have a lot of merit for Indian tech unicorns. And I'm sure if it is enabled where unicorns can seamlessly access both the markets, I think it will really help them to drive their growth both organically and inorganically over a period of time.
All right. So many points given by both Piyush as well as Shubhrajit on why this particular flexibility is required. Vivek Gupta, what is your view? And I would like to attract your attention to the specific issue of tax regime for that. First of all, does India lose out if the Indian companies go overseas and list? That was one of the issues that had come up in the government's mind and tax authorities' mind. And on the other hand, how to tax these companies once they are listed overseas? Have we got some sort of a conciliation on these grounds?
Okay, so look, from a tax perspective, what happens is if you transact in the shares of an Indian company, then effectively under today's law, India has a right to tax that income. So even if 2 non-residents, let's say 2 retail investors sitting in New York were to transact on the shares of an Indian company, the Income Tax Act in India will give India the right to tax that income, which is why a direct listing will need to be accompanied by changes in our legislative framework that will keep this tax regime fair to all concerned, yet at the same time not deprive India of revenue. So there is a certain construct that can be put in place. This is a construct that had been in place when ADRs and GDRs were very common. And we believe that simulation of that kind will be something that the government could potentially look at to assist in direct listing. On your basic point, I certainly agree with free choice. Indian startups, as Piyush said, come in a variety of shapes, forms, and sizes, and therefore will have different markets from which to attract capital. If they're able to attract more efficient capital from the US, it is only aiding the Indian economy. So anything that we do from a tax regulatory standpoint to assist in that, I think will only help assist the Indian economy grow.
Right. So for more funds required, and by this way, but one more question on the technicalities of that tax regime, Vivek, is there some understanding also on the different buckets of investors and how they can be taxed? There are private equity investors, there are institutional investors, and then there is retail bucket. So if an Indian company is listed overseas directly without having listed in India, then how is that particular aspect going to be sorted between Indian as well as the US tax regime?
Sure. And that's what I said in response to your first question, that the regime ought to be fair to all concerned and yet not deprive India of its fair share of taxes, right? So one possible construct around this could be the fact that if an investor, so let's say a retail investor, you spoke about various buckets of investors. So if two retail investors sitting entirely outside India are actually transacting on a US stock exchange, let's say the NASDAQ, on the shares of an Indian company, they ought not to be taxed. These are guys selling 100 shares, 1,000 shares, 10,000 shares, and the like. Yet at the same time, if a founder or an original private equity venture capital investor like Sequoia were to transact as a block deal and sell out its stake in the Indian company, potentially India deserves the right to tax it, because these are guys who are doing block deals, negotiated deals in the context of deriving benefits from value that has been generated in India. And therefore, from a capital gains tax standpoint, one construct could be if a shareholder who's, let's say, on the board, or if a shareholder who's holding more than 5% equity in the company transacts on any of his shares, those will be seen as transactions that put gain in India, and therefore those shares should be taxed. The capital gains on that sale of shares should be taxed. However, retail investors, institutional investors, FII type investors picking up 0.5%, 1%, etc., they don't need this tax friction.
Yes.
These are guys who should then be allowed to sell without having to pay Indian capital gains tax. Now, last sentence, what this would mean is you have very harmoniously married the old ADR GDR regime with also the indirect transfer tax regime in terms of taxing Indian value. That to me is a possible construct that the government could look at in terms of legislative enactment while thinking through these tax laws. Of course, there's a host of nuances to this, but at a big picture level, perhaps that is something that will keep the game fair between the government and the various buckets.
All right, emphatically made point there, Vivek, and definitely I'm also gathering from sources that government is open to the ideas and suggestions of the industry to get a harmonious tax regime going, and that is, remember, very critical to seeing foreign direct listing by Indian companies as a reality. Now, Piyush Gupta, one may ask that we have seen some successes here in India in terms of unicorn listing, some of the stamp of approval given in terms of valuation by the foreign investors, and a large part of the book being bought over by the foreign investors. So that pool is already coming in and they understand this market, to your earlier argument. Now, why do we still need US listing opportunity?
Nisha, great question. I think this actually has to be understood is that when people report that XYZ fund, and let's take a few funds that have been named publicly like BlackRock or Capital Group or T. Rowe Price or Fidelity have participated in an Indian IPO, these are actually very large fund complexes. And many of them have specific mandates to invest in emerging markets versus what they're allowed to invest in the US markets. So for example, BlackRock by itself is a 10 trillion AUM fund house. Just to remind everybody, Indian total market cap of all listed companies in India is only about $3 trillion. Same thing with T. Rowe Price, which is close to a 1.5 trillion. I can go on. But the key thing is when companies go outside of India into, let's say, US market, which is well regulated and well governed, you are able to access a much deeper pool of capital than what we see when companies list in India, but with foreign investor participation. Those are very small pockets, very dedicated, specific pockets, which are allowed to participate in emerging market listings. And therefore, we should feel happy that there is foreign investor participation, but there's a whole big sea and ocean of capital that our companies are not able to access today.
All right. So a very important point that you raised. And Subhrajit, you have been in touch with the many foreign participants who have been interested and invested in the Indian unicorn IPOs. What do you concur with that very quickly? And second point, do you also think that the Fed rate hike is a very big risk to the IPO participation by the global players and also dollar strengthening? Therefore, the window of opportunity for IPO may shut or narrow here in India, but that pool of capital can still be available in the US.
Sure, Nisha. No, fully agree with what Piyush mentioned. And, this is our experience we have seen as BOFA. We have probably led 20 plus ADR offerings for names like HDFC, Infosys, and the like. And what is very stark is if you look at the top institutional shareholding of the ADRs versus the Indian shares of the same company, you will find that there's very little overlap between the funds within the same long-only complex that hold these two instruments, which basically validates the views put in by Piyush, that there is a substantially large incremental pool of capital to be tapped through a US listing. Of course, whether it be an ADR or be a direct listing, but there's a substantially large pool of capital to be tapped. And more importantly, we have also seen for US listed stocks, even the ones which are ADRs for Indian companies, the liquidity metrics are far, far superior, right? So it is a deeper pool of capital and also kind of lends to much better liquidity metrics. The ease of fundraising in terms of doing large issuances at a higher frequency, as well as kind of it also lends itself to a much more diversified set of equity and quasi-equity fundraising options. So from those standpoint, for larger unicorns, while India remains a very, very viable market, there is absolute merit to also enable US to ensure the unicorns of the entire range of options.
All right. So yes. Quickly, Subhrajit, on that.
Yeah, sure. Second question, the fact that the Fed will look to hike rates probably somewhere middle of next year, and that the commencement of taper would happen are pretty much factored in by FI investors, and it has been so for quite some time. We have seen the recent market volatility turning a bit cautious for investors. However, we have seen the interest remain very, very sanguine and positive for IPOs over the next 6 to 12 months as well. We also will benefit from the fact that investors look beyond China for investment options, and India will continue to score very highly from that perspective, whether they're listings in India or listings in US.
All right, Subhrajit, as well as Piyush, you both made that point that yes, there are different pools of capital which will open up if foreign direct listing is allowed. But hold your thoughts, gentlemen. We have lots more to discuss on foreign direct listing dynamics. And with that, we'll slip into a short breather and we'll come back and discuss more with our panel of experts right here on Big Deal. Welcome back. You're watching Big Deal, and we are discussing whether we still need and whether or not foreign direct listing will be a reality soon. Now, Vivek, we touched upon the tax angle, but there are other certain regulations that needs to really change and align. How are they progressing from the front of company law, SEBI, as well as RBI, and also FEMA guidelines?
Look, company law has already been amended. So I think the company law provides an enabling framework for a company to engage in direct listing. So that's not a problem. SEBI, RBI, FEMA, and RBI and FEMA I bucket as one. So these regulators have in the past on many, many occasions, because this has been a topic of discussion for almost the last decade or even more, These regulators have submitted, we understand, various recommendations to the government at different points in time. I do believe that both these, FEMA as well as SEBI, could be addressed by regulatory guidelines rather than legislative amendments. And therefore, if the government takes it upon itself to open up this route, this should be possible, clearly.
Right.
The tax piece is the one piece where I think we will need amendments to the Tax Act, which is what we already discussed. So these are really the four broad buckets which need to align for Indian companies to go hit the overseas markets.
All right. So path getting clearer on other regulatory fronts, but definitely tax is going to be critical. But Piyush Gupta, you made a point that there'll be larger pool of investments and there'll be better understanding. To your point on better understanding of the companies, which are the sectors you think which benefit the most in the total tech startup ecosystem, which may look for foreign direct listing as a better opportunity compared to India?
Nisha, I think some of the obvious sectors is, for example, B2B SaaS companies, which have, in most cases, international or US corporate clients. So even if you look back in the past, the Infosys, the Wipro, WNS, Genpact chose to list in the US because they wanted to build that comfort around being in a market which was close to their customers. It gave them visibility. It gave the comfort to clients which have long-term contracts, that these companies were well governed. So I think that's one obvious sector. If you look at some other sectors, like, for example, biotech, I'll give you an example of Moderna, which is $125 billion market cap company today. But when it listed 3.5 years ago, there was no coronavirus. This was a very speculative mRNA technology company. And there is deep expertise in the US around biotech and health tech, I would say. If you look at similarly energy efficiency vehicles, electric vehicle technology, many of the companies listed in the US do not have any revenues. They're purely listed on the basis of technology prospects of those companies.
Yes.
While we have come a long way in India, we are a long way away from supporting those kinds of companies. And, again, one size does not fit all. Therefore, the diversity of sectors and startups to give them a better chance, it'll be great for the country to allow these kind of startups to list internationally if they so choose.
All right. So some of those sectors that you mentioned, especially SaaS companies which are competing in the global arena with the global companies and looking at global business as well. Subhrajit, to the last point, what do you think about the particular aspect of the regulatory conflict where some of the sectors are highly regulated in India by RBI or the insurance regulator? Do you think there'll be a conflict and they'll be restricted?
Those sectors you referred to, Nisha, and which tend to have a higher regulatory kind of oversight than say other sectors, we do not see it being an issue whether it is an India or a US listing. Global investors have evaluated emerging market stories, each of whom have specific country-wise regulations which govern their business model, and hence people do kind of value each company on its own merit and what kind of profitability outlook those kind of companies offer within the overall paradigm in terms of regulations, etc. So we do not see that being an issue. Of course, local investors will probably have a better sense of those regulations, but foreign investors are smart enough because they evaluate emerging market stories on a regular basis to kind of see through all the regulations and form a view on the particular company.
All right. To one point, Subhrajit, while all of you have backed that, hand on heart, how many will really choose to list on the Indian bourses if this option is available very quickly? And second, like a Nykaa kind of astronomical success where the retail participants gained so much, why do we let that opportunity go away from the hands of retail companies where the entire consumption and business is built on their very money? Subhrajit.
Sure. So clearly for Indian domestic consumption stories, classic consumer tech, fintech brands, India listing has a huge rub-off effect on their business, and many of the investors will actually end up being their existing customers or future customers. However, what we believe is as companies go larger, there's a huge range of unicorns, right? I do not think it is India or US. What we are basically saying is both the markets are important, especially for the larger unicorns. And even within consumer tech, we'll have a lot of companies which have global aspirations to grow beyond India. And they're having a US listed stock has a lot of merit in terms of global visibility, as well as
Yes.
acting as a very active M&A currency for
Right.
overseas.
All right, Shubhrajit, Piyush, as well as Vivek, great conversation. And yes, this debate will continue. All eyes on the union budget. But now we are wiser how Indian market understands the unicorns. We have a pocket created in that particular segment already with the recent IPOs. And therefore, the comparison between India and US listing will be far easier going forward to make that choice if the government finally allows foreign direct investing in listing. Thank you so much, gentlemen, for joining us. And thanks to all the viewers for joining us on Big Deal.